Okay, grade 11, welcome once again. Today we are looking at inventory systems. Okay, I've picked out this question. The transactions below were taken from the books of the bar stores. Okay, required 6.1. Analyze the transactions according to the columns provided in the answer book. Okay, the columns that we have, okay, I've drawn them here. Okay, we have got the perpetual inventory system, the periodic inventory system. We are supposed to indicate the account to be debited, the account to be credited under the perpetual inventory system and under the periodic inventory system. Okay, let's go back to the question paper. So these are our answer template. Okay, the transactions are from 1 up to 4. Okay, fine. Let's go on to transaction number 1. Bought trading stock and transferred funds electronically. So in other words, they are telling us that the trading stock was bought on cash. Okay, fine. So which two accounts are going to be affected? Remember the double entry principle. Whenever a transaction takes place, one account is supposed to be debited, the other one is supposed to be credited. Okay, under the perpetual inventory system, okay, remember, okay, we have got trading stock. Okay, we've got trading stock. When you read a transaction, you should identify the two accounts. We have got trading stock. I'll just indicate by writing TS, trading stock, which is an asset. Okay, and then money was also transferred electronically, that is bank. So we have got trading stock and bank. Both of these are assets. Okay, all right. Under the perpetual inventory, we have got trading stock, but under the periodic inventory, instead of trading stock, we use purchases. We use purchases, okay, for trading stock under the periodic system. And purchases are owner's equity because we consider them to be an expense. All right. So these are the transaction, or these are the accounts that we are supposed to open, or these are the accounts that we are supposed to show, the one that is supposed to be debited and the one that is supposed to be credited under the perpetual inventory system and under the periodic inventory system. So when we look at our trading stock, because stock has been purchased, it means our trading stock is increasing. Okay, the bank account is decreasing because money has been taken from the bank account. And then the purchases account, the effect of purchases on the owner's equity, they decrease owner's equity. Okay, so it's going to be a minus on the owner's equity. Okay, now you remember that, okay, every time when an asset is increasing, it increases on the debit side. When an asset is decreasing, it decreases on the credit side. So we already know what to debit and what to credit. Okay, on this part of purchases, we also have got bank here. Okay, money has been spent to purchase. Also, it's a minus. Okay, whenever owner's equity is decreasing, we debit. Whenever bank is decreasing, remember bank is an asset. When bank is decreasing, we are supposed to credit. So this is how we are supposed to do our recordings. Let's go back to our template and record the same way that I have explained that side. So I said we are going to debit trading stock. I'll write T stock. Okay, trading stock. And then we are going to credit bank. Because bank is decreasing, trading stock is increasing. Okay, under the periodic inventory system, remember we've got purchases and bank. I said we are going to debit purchases. Purchases, they are owner's equity, they decrease owner's equity. So we are going to debit our purchases and then we credit bank again because money has been spent to purchase the stock or the purchases. Okay, so we are done with the first part. Let's move on to number 2. Okay, let's go back to the question paper. Return trading stock to a creditor. Okay, whenever we return stock to a creditor or to a supplier, we call those creditors allowances. Okay, but also after this transaction took place, we need to identify the two accounts that are supposed to be affected under periodic and also under perpetual inventory system. Okay, we'll start with the perpetual inventory system to identify the two accounts that are going to be affected. But on both sides, periodic and perpetual, we have creditors. We have creditors. Remember, here we're talking about suppliers or creditors. Stock was returned to creditors. Creditors are liabilities. Okay, liabilities, whenever they are increasing, liabilities increase on the debit side and they decrease on the credit side. Okay, because there are returns, it means our creditors are decreasing. So whenever creditors are decreasing, they are supposed to be debited. Whenever they are increasing, they are supposed to be credited. Okay. So because of this transaction, returned trading stock to a creditor, it means the creditors are decreasing. So automatically under the perpetual and the periodic, we know that the account that is going to be debited, it is what the creditors control. Okay. So which other accounts are going to be open because of this transaction? Okay, on the perpetual inventory system, okay, the returns are going to affect the trading stock. So we've got the trading stock account, and the purchases account under periodic purchases, or we can say the creditors allowances. Okay, creditors allowances. So these are the other accounts that we have. Okay, because our stock was returned or purchases were returned, okay, fine, what is going to happen? Okay, fine, to our trading stock under the perpetual inventory system, when we return some of the things, it means the stock is actually going to decrease. Okay, how do we decrease stock? Stock is an asset, and assets decrease on the debit side. We are going to debit on the credit side, sorry. Stock decreases on the credit side. We are going to credit our trading stock. Okay, on the purchases and the creditors allowances, the effect that they have is that they decrease our purchases. Okay, so how do we decrease? Okay, find our purchases. We decrease them also by recording them on the credit side. Okay, so we have got creditors, trading stock, and purchase. The creditors are going on both sides. Okay, and then the purchases for the periodic or the creditors allowance, and then for the perpetual inventory system, we've got trading stock. Okay, let's go back to our template and indicate. So on both sides, we are saying creditors control. We are going to debit creditors control. Even here on the periodic, creditors control. Okay, and then what is it that we are supposed to credit? Okay, remember, returns will decrease the stock that we have. So the trading stock, here the trading stock is decreasing. We show that by crediting it. And then on this side, we are going to credit the purchases because they are also decreasing. Or we can indicate creditors allowances. Okay, we can indicate creditors allowances. Okay, this is how we record transaction number 2 according to the perpetual inventory system and the periodic inventory system. Let's move on to number 3. Okay, number 3 says sold goods on account. Okay, when we sell something on account, it means it has been sold on credit. Okay, it has been sold on credit. Okay, with the perpetual inventory system, okay, whenever there is a sale, automatically we know that there are going to be sales. Okay, how did we sell? We sold on credit. Whenever we sell on credit, we create debtors control. Okay, we've got sales and debtors control. Okay, what else do we have? Okay, under the perpetual inventory system, we are also going to open a trading stock account because of these transactions, trading stock account, and a cost of sales account. A trading stock account and a cost of sales account. Okay, so of course we know that sales are part of the owner's equity. This is owner's equity. Debtors are assets. Okay, trading stock is an asset. The cost of sales is also owner's equity. Okay, so under the perpetual inventory system, we are going to record sales, debtors control, trading stock, and cost of sales. But on the periodic inventory system, we are simply going to record the sales and the debtors control. Okay, so what is happening to the sales? The sales is they increase its income. Income increases owner's equity. Anything that increases owner's equity is supposed to be credited. Okay, I'm going to record sales on the credit side, both under the perpetual inventory system and under the periodic inventory system. Okay, let's go to our template. Okay, I'm going to record my sales on the credit side. Sales are owner's equity. Whenever owner's equity is increasing, we credit. Okay, sales on the credit side. Remember, I said on the periodic inventory system, we're only also going to record the debtors control. The debtors control are assets, and assets are increasing. The assets of debtors are increasing because of the credit sales that we made. So this is how we only record under the periodic inventory system. Now, when we come to the perpetual inventory system, Also, okay, we are going to indicate debtors here, debtors control, okay, on the debit side, and sales. And also at the same time, we are going to indicate, okay, trading stock and the cost of sales. Okay, fine. What do we debit? What do we credit? Our trading stock, okay, decreases whenever we sell. So how do we decrease trading stock or an asset? By crediting. So we are going to indicate trading stock on the credit side, and then owner's equity, okay, the cost of sales are owner's equity, then we record them on the debit side. Okay, so this is how we record this transaction under perpetual and under periodic inventory system. Sales and debtors control. Sales are being credited on both perpetual and periodic. Why sales are income? Income always increases on the credit side. Anything that increases owner's equity, it is supposed to be credited. Okay, in this instance, why did I credit the trading stock? Whenever we make a sale, the trading stock that we had decreases. Okay, cost of sales, it is an expense. We record it on the debit side. Okay, debtors control, it's simply indicating that we made a credit sale. We have just created debtors, and our debtors are increasing. That's why they are on the debit side. Debtors are assets, and they are debited whenever they are increasing. Okay, fine. Let's look at the last entry that we have. Okay, we have got received an invoice for carriage on purchases. Okay, we received an invoice, and an invoice indicates a credit transaction. Okay, we purchased, and for the transportation we received an invoice. It means they are still expecting a payment from us. So whenever we have got a payment that was not made, a money that is payable, then that becomes creditors. Okay, so both under the perpetual and under periodic, we know that we are going to credit the creditors control. We are going to credit the creditors control. Then what do we debit? On the perpetual inventory system, okay, carriage on purchases, they affect the trading stock. They increase the trading stock. Trading stock is an asset. Whenever we want to increase trading stock, we increase on the debit side because assets increase on the debit side. Okay, so let's record under the perpetual. Okay, I said we are going to debit trading stock. Trading stock. Why? Because the money for carriages increases the value of our stock, and trading stock is an asset. It increases on the debit side. That's why the account to be debited is the trading stock. What about the account to be credited? We have not yet paid. The money is payable, okay, for these deliveries that took place. So then we are going to indicate creditors control. Creditors control. Okay, it's the same thing under periodic inventory system. On the credit side, it's going to be creditors control. What about on the debit side? We are going to indicate carriage on purchases. Why? The carriage on purchases, they increase the value of our purchases, and purchases are debited. Anything that increases purchases is supposed to be recorded on the debit side. Okay, this is how we do the double entry under the perpetual inventory system and the periodic inventory system. The account to be debited and the account to be credited. I hope my explanations were not that difficult. You managed to understand exactly what I was doing. Okay, the account to be debited and the account to be credited under perpetual inventory and also under periodic inventory system. Okay, in the next video we are going to continue with 6.2 of the question. Okay, we are going to continue with 6.2 of the question, whereby we are being asked to calculate the cost of sales. Okay, thank you.